Today, I'm going to talk about how to save up a down payment for your first real estate investment. Whether it's single family home, that's where I got started, or your first multifamily or apartment complex, which is where I transitioned later. So, I call this the law of the first deal. The first deal is always going to be the hardest one to get, right? Because it requires a lot of discipline to save up a lot of money. It requires you to take a look at your financials and see, where you're spending money that you can cut, how you can increase your income. So let me kind of share how I got started. So, for me, I have a high income W 2. So I'm a pharmacist. I've been a pharmacist for 10 years. I currently work as a pharmacy director. As I moved up in my career, I've increased my income. So my first job as a pharmacist, I was probably making low six figures, back in 2013, but I came out with $250,000 of student debt. So at that time, I was probably taking home around $5,000 a month. And, I just graduated from pharmacy school, still at that college mentality. So for my first job, my base expense, coming out was rent. So I was in kind of central California. It was a little bit cheaper there, and I just rented out a room in an apartment complex, and my rent was $500 a month, including utilities. So I took home, $5,000 a month, and then I basically had my rent as 500, which was 10%. So I had a saving rate of $4,500, and keep in mind I had to make my monthly loan payments, which I believe were around, I think, $2,000 a month or something like that. So after that 2,000, I would have about roughly, $2,500, and then I would basically use that as my savings rate. So I'll be honest, when I for the first 4 years of me graduating as a pharmacist and working, I didn't really think about like saving money. I was just focused on paying off my student debt, right? So I'd save about $2,500 a month. Obviously I had some other expenses here and there, so subtract maybe another $1,000, so I'd maybe save $1,500 a month. What really skyrocketed my savings was when I got my next job, and I got like a huge raise. I think I got like at least a $20,000 to $30,000 raise. So I went from about $5,000 a month take home to maybe like $7,000 a month, and then I was actually able to move back home with my parents. And that basically cut my rent expense and my food expense because you're just living at home. And this is very typical in Asian American cultures to basically live at home with your parents, to save money, and just to start saving up for a house or pay off your student debt, or start investing into a 401k. So this is when my savings rates really increased. Right now I'm taking home $7,000 a month. I have no rent. My food expense went down. I just would buy random stuff here and there, so I was spending about $1,000 a month on average. If I want to go out to eat, if I want to like travel, buy myself something, like whatever that was. So basically, my savings rate would be about $6,000 a month, and 2,000 of that would go to my student loans, right? And I would save, um, $4,000 a month, right? So now my savings rate's increasing, and then while staying at that job, since it was a union job, all of a sudden everyone that just started working there got a 10% raise. So like I just started, and literally like 3 months later, I got a 10% raise. So now I'm taking home $8,000 a month, and my saving rates increased again, right? So basically, I was just saving all the money. Didn't lifestyle inflate, which is very hard, right? I didn't, get a new car. I didn't have fancy things. I would travel on vacation, and actually to pay for a lot of my flights, I would credit card hack with the Chase Sapphire Reserve card. So they get those initial bonuses where if you spend like $5,000 in the first 3 months, um, it would basically give you like two free round trip flights. And every year I would go on two international vacations to like Europe or Asia, and typically my flight would be covered. And then what I would do is, back then Airbnb was a lot cheaper, so we'd actually Airbnb a place and then have three or four of us. in there so that we would save on the cost, and then we just eat out and try to have fun that way, right? So, it was still very economical, and take out whatever money I could save. I would basically throw out my student loans, and I would keep at least like $10,000 to $20,000 as an emergency fund. But I really had no risk at all. Like I said, I was just living at home, so like I didn't really have to worry about anything major happening to me, right? So I just wanted about 10,000 to 20 in my bank, and anything excess would just go off to pay my student loans. So, fast forward that I finally paid off my student loans in about 4 years. $250,000 in 4 years. So, I was averaging around 80K a year. And, during tax season, I always get like a nice lump sum check because, I didn't really, I'm paying a high tax bracket, and I would get 10,000 to, $15,000 a year. And I would just throw that at my student loans as well, like treat it as if money I never got. Right. And then at that point, I got my first, pharmacy director job, which, increased my pay once again. I was still living at home at the time, but and my student loans are paid off. So I just said, you know what? Now I want to save for a house, right? Like I've basically been able to save $80,000 a year, roughly, at my current savings rate. And I just said, well, I need about $80,000 to put 10% down in a house in California, right? It's expensive here in the Bay Area. So I just said, all right, just continue what I'm doing again, Um, and then eventually I saved $80,000. Keep in mind, I didn't work like overtime or anything. I just worked your typical 40 hours a week. And once I had that $80,000 saved, I remember I bought my first house in Livermore, California for $800,000, put 80K down. And I remember when I first got in the house, I literally wiped out my entire savings account. I had like 2,000 bucks in my savings account, and my emergency fund was my parents. I was very fortunate that they could be my emergency fund if anything major broke. Nothing did, fortunately. And, basically got to live there. My mortgage was around $3,000 a month, principal and interest. And I lived in the master bedroom, and I would rent out the three other bedrooms for $1,000 each. So that actually covered my mortgage payment. And I just had to cover my property tax, my insurance, utilities, which was 1,500 bucks a month. And ironically, when I got the house, I was probably taking home $89,000 a month at that point, and spending 1,500 bucks towards my living expense. And actually, at that point, that's when I really hunker down on my expenses. Like when you buy your first house, you just feel so tight that you don't feel like you want to spend money anymore. Like, so I stopped buying clothes. I stopped going out to eat as much because I would cook at home. I would just, wear the clothes I already had. There's a lot of clothes that I own that I don't wear. So just utilizing that and try to save as much money as I can. There's a lot of free activities that you can do, like just like watching sports with my friends or going for hikes. There's a lot of things you can do that don't require much money. Um, so once again, I want to save up money again because I had zero savings. So I was like, you know what, I need to save money again. And once I rent out those rooms and it covered most of my expense, I was able to save up again, right? And then basically you rinse and repeat that process. Again, I basically saved another $100,000, bought another house hack, rented out my previous house. The second house I bought, I house hacked that as well. Helped me save money again. I bought a third house hack, and that's how I got started. Right, this is how like your wealth starts to snowball. So, basically, I didn't really keep my expenses, change my expenses for at least like 7 years of me graduating, despite making over six figures um, a year. And this is the hard part, right? Like you can't lifestyle inflate, and just keep it very, bare bones, minimal. I'm pretty minimalistic, to be honest. Like I don't need like fancy things or nice things, just the basics and necessities. And just really was watching my credit card statement on a daily basis. I would see every transaction, so it'd be fresh on mind, like how much money I spent, and I would really, try to monitor that. So, now fast forward, I own a couple single family homes. Like, so how did I finance my apartment complexes? I would take all the equity of my single family homes, like their equity, they went up by like 300 to $500,000 each, right, over a 3 year window when the market was crazy in California. So basically, I made almost like $1 million to $1.5 million in equity. And when interest rates dropped during COVID, I did a huge cash out refinance where I would lower my rate, but also pull out money on top of that. And I pulled out like close to $1 million, and that's what I used to fund my 2 apartment complex and my mobile home park. And this is how like real estate compounds and snowballs, right? Like literally, I just got started by um, literally just trying to save money, right? Keeping my savings rate very high, my expenses low, and try to raise my income. And that just snowballed into me buying real estate. I would house hack that, and then my real estate that I bought would just go up in value naturally through appreciation, and that built up like a million to $1.5 million in equity. And then when interest rates dropped, I pulled out money tax free and lowered my rate. But now I'm more cash flow negative on those properties. I put out a bunch of equity, but I was able to use that equity to go buy my apartment complexes and leverage that, and stabilize that and renovate that. So this is what I mean by real estate's a snowball, right? So now that I'm doing apartments, now my apartments, I can cash out refinance my apartments to snowball into more units, right? So this is how I have more and more money, and this is how the rich get richer in a sense, right? Like it's just literally um, how you play the game, and it gets easier and easier. Like the first couple deals are always the hardest, but once those go up in value or give you more cash flow, then you can leverage those to buy even more real estate, right? Or you can sell one of your single family homes and trade up to an apartment complex, right? Like I still have that option too. I'm a buy and hold investor, so I just did a cash out refinance, use that to go buy apartment complexes, but I still have equity in those deals that are still left over that I could sell, 1031 exchange it, use the equity to buy more apartments to scale. So this is what I kind of share with my students, is that, like, yes, I have a course in mentorship on multifamily and buying apartments, but I leveraged my single family homes to buy apartment complexes. So if you're in a high cost of living market on the coast, like you can just house hack a single family home, put 5 to 10% down, you know write that out for a couple of years, it goes up in value, and then you can pull out a cash out refinance, use a HELOC on it, or just sell it, trade up to an apartment complex, right? It takes time, it takes a while, right? You need at least $300,000 of equity, whether it's you saving it up or you pulling it from a piece of real estate or selling a piece of real estate that has 300,000 actually, then trade up to an apartment complex. So it takes time, and the hardest is just to have that discipline of saving money. Like not many people have the discipline to like literally save a bunch of money for 7 years, not lifestyle inflate, and keep things the same, right, while still enjoying your life. So like I see a lot of people, they go to like Air One and spend a lot of money on groceries when you just can go to grocery outlet, or um, Walmart, whatever. There's budget options, right? So these actions all compound, where if you spend a lot of money on one thing, it trickles in other areas that you're not even paying attention to, right? Versus if you try to save money, it trickles to all the other areas in your life as well. So just be very cognizant of how you spend your money, because I always hear people who are farmers just like me, and they're just like, you know what, like I don't know why every month I get all the money, it's all gone, I don't have any savings, I can't save it for a house, right? And it's probably because they're just spending a lot of money that they're not even aware about, right? And things add up, here and there. So key is to really analyze how you're spending, and basically not lifestyle inflate for a 7 year period, and save a bunch of money, and that's how you lay the foundation to build your wealth. And now my real estate is a compounding vehicle, and it will continue to compound, right? Like I said, my single families are going up, I can sell it, 1031 exchange, buy more apartments, I'm stabilizing apartments, increasing the value of my apartments, I can cash out refinance that, use that to buy another apartment complex. So the hardest part was paying off my student debt and saving up for that first deal, right? So I was able to save about $8,000 on average a year for like 5 years to basically pay off my student loans and save for my first down payment on a house. So that's how long it took me, and I'm like super disciplined. So, don't beat yourself up. I get it. Like there's other obligations going on, but the key is just create a plan and stick to it, right? If you need help creating that, reach out to me. Happy to help you create a plan. If you don't mind being recorded, and the key is just to get started. And once you get that first deal, that's when things start to compound. And the key is just getting that first deal, and after that, that's when the snowball starts. So hopefully you found value from this video. A lot of people ask me like how to save for a down payment for their first house. This is exactly how I did it. So hopefully you got a couple nuggets out of it and could kind of tweak it and kind of make it your own to help you save it for your first single family home, if you're interested in, buying your first multifamily, check out my Making Multifamily Money course in the description down below, where I help people go from single family to multifamily. And it just takes one multifamily deal to basically change your financial future, right? The cash flow from one multifamily deal is enough to almost retire you from your day job, depending on, how much you make. So once again, thank you so much. Hope to see you in the next one.